Today, we're diving deep into the currency markets, specifically looking at a fascinating situation developing with the US dollar and the Indian rupee. The USD INR pair is showing some surprising strength, and we need to unpack why that is. So, what's going on? On one hand, you'd expect the US dollar to be under a bit of pressure. We're seeing increasing bets in the market that the Federal Reserve might be done with its interest rate hikes. Some are even whispering about potential rate cuts sooner rather than later. Typically, a less aggressive, or dovish, Fed makes the dollar less attractive to investors, which should weaken it. On top of that, there's been the looming threat of a US government shutdown. All this political and economic uncertainty usually doesn't do the dollar any favors. But here's the twist. Despite all that, the USD INR pair is holding its ground, trading quite firmly. So, if the dollar's fundamentals are looking a bit shaky, what's propping it up against the rupee? The answer seems to lie on the other side of the equation. The Indian rupee itself is facing its own set of challenges. A major factor is the price of crude oil. India is a massive importer of oil. So when global oil prices rise, India has to spend more US dollars to buy the same amount of fuel. This increased demand for dollars naturally pushes the value of the USD up relative to the INR. And right now, oil prices have been stubbornly high, creating a persistent headwind for the rupee. Another piece of the puzzle is the activity of India's central bank, the Reserve Bank of India, or RBI. It's widely believed that the RBI has been actively intervening in the currency market. They've likely been buying up US dollars to prevent the rupee from appreciating too quickly, aiming to keep it within a stable range. This intervention effectively puts a floor under the USD INR rate. So, what we have is a classic tug of war. The US dollar is being pulled down by dovish Fed expectations and political uncertainty, while the Indian rupee is being weighed down by high oil prices and potential central bank intervention. For now, it seems the factors weakening the rupee are winning out, keeping the USD INR pair on solid footing. It's a really interesting dynamic to watch, and we'll be keeping a close eye on how these competing forces play out in the coming weeks. That's our analysis for today. If you found this breakdown helpful, please hit that like button, subscribe to the channel, and ring the bell so you don't miss our next update. Thanks for watching, and see you in the next video.